Check, check, quick sound check. Can everybody hear me loud and clear? Let me get a thumbs up in the chat if you can hear me. Audio, video, great, awesome. Thank you everyone for joining. Welcome to At the Buzzer, our market recap. If this is your first time here, I am Coach Jay. Very nice to meet you. The goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but our goal as traders is to identify opportunity and see how we could have taken advantage of those opportunities while managing our risk. You will see that Coach Paul's not here with me today. Coach Paul is traveling today, getting ready for that long weekend. So we are just going to go with it for now. Safe travels to Coach Paul for your weekend. But hopefully everybody had a great week. Let us know in the chat how your week went. Were you up on the week, down on the week? Anything that you learned from this week? I think we learned a lot as far as the Topstep team goes, as far as trading that house account and trying to figure out things there. And it's a work in progress, right? We are building that, like MP says, building the plane in the air, trading size with that account with a bunch of great traders and trying to figure it out. But a lot of lessons to take from this week for us. So hopefully everybody learned something this week. I know it is Friday, the day before a long weekend. A lot of us probably want to get away from the charts. So we'll get right into it today, and we'll let you go a little bit early potentially. Courtney, green week, slow and steady. Very nice. So let's get into the charts. The way we start every segment is focusing on our top percentage movers on the day. To the downside, we had platinum down 1.71%, silver, sorry, I said up, platinum down 1.71%, silver down 2.48%, and crude oil down 3.06% for our biggest percentage mover to the downside. To the upside, we see the NASDAQ up 1.04%, corn up 1.39%, and the Nikkei up 1.84% for our biggest percentage mover to the upside. Very interesting day. I want to start with the ES. That's where we did take the house account trades today. So we'll talk about, kind of what the market looked like during that morning segment, what ultimately we did see for the rest of the day, and what a lot of what we've talked about this entire week. With it being the end of the month, we have seen, just this last week, a lot of consolidation, right? The market has been I'm looking at a 30-minute chart here. We've been in this range for about 10 days now, right? It's been a long time in these ranges, calling the high of the range 5660, the low of the range 5600, and we're stuck in that range. The market has not decided a direction. Not sure if we're waiting for some news. We know we have the big FOMC meeting coming up in September, and it could be waiting for that, where we're still seeing about a 65% probability of a 25 basis point cut, and a 35% probability of a 50 basis point cut. So maybe the market is waiting for that. If so, we have about another 2 or 3 weeks in this range. But that does not mean that there's not opportunity, right? If we identify the extremes of the range, we can trade it like a range bound market where we're fading the highs, shorting at the highs and buying at the lows. And we will see what the market presents to us right now. If I throw Coach Paul's moving averages back on there, they're all, I can barely even see them, right? They're all kind of braided up where the market's not making a decision right now. And that is okay. I'm going to go down to a shorter time frame. Let's look at a 3-minute chart. And I want to talk about the trades that we took in the house account today. We were looking to go long on this breakout here. We were looking for a long. We saw in the overnight session, we did sell off, and we were up about a percent point in the ES, and looking for a break potentially towards the highs of this range at 5650, 5660. So we're buying here, and Dakota and I making some of the calls on this account. We're looking potentially for buys as we're holding VWAP. We were holding the 200 moving average, but we never truly got the momentum to push us to the upside. I had called out on Fast Markets that there was a sell side imbalance around 5640 that we were dealing with. And if we look back at yesterday, when this high volume spike came in at 1:27 Central Time, that's where I believe, and not that I believe, that's where the market showed us that it was making a decision, right? If we frame out that high volume candle and it's on a 3-minute chart, and I show you guys we do this all the time, in the first hour of trade, the market was making a decision about that range, whether we were going to break to the upside or to the downside. Ultimately, I think we were a little bit late on identifying that it was a range-bound market, and a lot of our entries came in the middle, right? We were buying at 56.37, where on our initial one, I did like the buy towards the highs of that range, but ultimately what happened, we got stopped out on this kind of stop hunt move here, checked below the opening range, and then bounced right back into it. And that's just trading, right? I think if I review the trade in hindsight, we could have set our stop below this swing from the overnight session, but you take a trade, you establish the risk, and you go with it from there. What I think we could have done, and I'm reviewing a trade that I had input on myself, is potentially take a short when we showed that we could not break above this 56.45 area. But if we're looking at this range, there's a couple of ways to look at this, right? It's a range-bound market. You trade it that way until it breaks, where you're buying at the lows, selling at the highs. But once we get a break of it with some volume, and there was some decent volume on this 9:57 Central Time candle that broke us out of that range. At that point, we've talked about this before, the kind of tale of two markets, where we have range for the first hour and then trend potentially for the second half of the day, right? Where we broke out, and I think a trade that we had called out, we had the check mark on it, and unfortunately we just didn't get the entry, was this candle here, again, 9:57 Central Time, where we saw some volume come in to break us below that range. And looking at, this is very funny now that I see this again in hindsight, I was looking at a 5-minute chart. If I stayed on, and Coach Paul and I talked about this yesterday, if we stay on the time frames that we measure things out to where we want to be, if we look at this on a 3-minute chart, the 50% of this range that we had the sell-off is 56.27. On a 5-minute chart, it's a little bit higher, but that's what we talk about all the time. Levels, the market is not that perfect, right? It doesn't trade level to level that way. Every area is a zone. So this zone, right, 56.27, and on a 5-minute chart, it's going to be 56.29, right? Because if I would have to extend this up a little bit, that's why I love my 3-minute charts. 56.29 to that 56.27 area, the low of the initial balance, was where we were looking for a short. We did have the check marks on it, didn't pull the trade, and was a nice short. We had some really nice continuation. If we can look at some of the other volume that came in, here's another spike here at 10:30 Central Time, where it doesn't respect this range perfectly, right, where we do look above it. But I think another opportunity to look for a potential short if you were not in it already. And then ultimately we come down to a major psych level of this 5,600. We talk about these levels all the time. Everyone who's trading the ES is going to know that we're trading 5,600. So when we get there, you want to watch the market reaction, where we had a sell through 5,600 on the initial test. And then right after that, we bounce up, setting the low for the day, where the volume that was coming in to sell this market stopped at the lows of that range. Right now, if we zoom out again, we go back to the 30-minute chart, we know why those sellers stopped, right? Because they've been stopping there pretty much all week, right? Where we have, and we did have an extension of it on Wednesday, but for the most part, we've been stopping around that 5,600 major level, and patterns are patterns until it breaks. What today was just a higher time frame range bound day. So off that bounce of 5,600, we then kind of rally up to take out the all-time highs, not all-time highs, the daily high, sorry about that, and make a new high on the day, where we traded up towards some of these top step levels. We have yesterday's high up here. We have last week's high as well. A lot of these same levels. So I go to update these Top Step daily levels website every day. What I've been noticing over the past 2 weeks is I haven't had to update them, right? I'm looking at the same levels over the past 2 weeks, which tells me, and we update these levels every morning, And I'm looking at it, so well, those same levels apply. There's a little bit of an adjustment to maybe where we saw some selling coming in or where we saw some buying. But for the most part, we have been trading the same levels, and we have to look at the market that way until it tells us something different, which it has not. On a daily, if we go out to a daily, and we can see all of the overlap in these candles, and not much volume to talk about, right? Where we're kind of low volume right now, a lot of overlap. The market will make a decision eventually, but right now it is deciding to stay in this range. We got a question from James Hansen. Jay, what was the market data at the low on NQ? Let's talk about it. We'll switch over to NQ real quick. And hopefully my charts look okay. I'm seeing like a little bit of a delay over here on my side, but hopefully it looks clear to you guys. Let's look at the 3-minute on the NASDAQ, and pretty much the same thing, right? Actually, let's go to the 30 first. A lot of overlap as well here. I'm calling the highs of the range in the NASDAQ 19,630 to about 19,680. We know the NASDAQ is the NASDAQ, so these zones are going to be a little bit wider. Delta, please. Give me one. So, James, I don't have that platform up. Let me see if I can pull it up for you. Give me 1 second. I'll see if I can pull that up. But same thing here in the NASDAQ. I'm calling the lows of the range. We had settlement right down at 19,393. We bounced pretty much right off of settlement, right where we saw that sell-off kind of lose the momentum. We traded through settlement, reclaimed it, and traded right back up. Again, a quintessential range-bound market where we're fading the extremes of the range. Sometimes it's beneficial to zoom out and see what the higher time frame range is telling you, because that's where most of your really good opportunities are going to come from. And I have to remind myself of that in my trading as well. But I got the platform loading here, James. Give me 1 second on that Delta number. Settlement has been fire this week. Yeah, absolutely. Right. In a range-bound market, I think that settlement price is going to be extremely important. And I don't have to tell you that, right? The market is showing us that it reacts to settlement often. So Quantower is loading right now, James. I will get that Delta number for you. But if there are any, let me know if there are any other questions. If not, we can switch over to another market. Thoughts on Apple with lots of volume over the past 2 days, but didn't have much range. Then on a daily chart, it looks like there is a massive divergence on price. I haven't looked at Apple charts either, but maybe I'll take a look at those. But if we're seeing, so you're seeing a lot of volume in Apple, but not a lot of price action, that means it's just accumulating for a move, right? Where it's like building up pressure to eventually break out in a direction. We'll see what that direction is. It's very hard in a range to try to determine what the market is doing, right? Whether someone's building for a short or for a long. It is balanced, like you said, James. So we don't really know the direction until it breaks. I got a question from Joe. What decision you arrive at based on 3-minute candle imbalance? 3-minute candles in balance, if I'm seeing a lot of overlap in 3-minute candles, I'm just not making a decision. Yep, that's for me. If I'm trading at my best, I'm just not going to take a trade. And Kwaku, that's a great comment as well. It's extremely frustrating to see the hindsight view of those charts if you're down, as everything makes sense only after the day is finished. And that's why we're doing this, right? Where it is important to, and I was a basketball coach for 10 years, right? I don't think I had a team that played well that didn't watch game film, because when you're in the thick of things, when things are moving fast, it's hard to make decisions. You see every professional athlete do it, right? You see quarterbacks when they throw an interception, they're on the sideline looking at film to try to identify what happened. And that's why I like doing these recaps, where we can identify things, we can see patterns, we can find patterns. And when those patterns play out in real time, then we can say, hey, this is what I've studied, right? This is what I've practiced. This is what we've seen to a high probability. And of course, we don't, know that anything is going to happen, but you lean on the probabilities, right? The same way we want to have a high a decent win rate that matches our risk to reward, we want to identify high probability setups to say, hey, 80% of the time that I see the market do this, I can expect this. Now, is this one of the 20% of the time that it's not going to happen? Potentially, but you want to lean on those probabilities and then take your trades from there. Basic concept, but how do you know if a level is broken? So that was Calvin. Calvin, for me, first I want to identify what a potential level is, right? So in the NASDAQ here, we have this 19,525 level, which was last week's low. So I'm looking at that. And for me, the confirmation that a level is officially broken is volume through that level, right? If price just goes below the level, I consider that BS price action. If price goes below the level with volume, I'm going to consider that a convinced move, right? Because we know how the markets go. If there's no bigger players there, the markets are still going to move, right? If it's a low volume time, there's not a lot of orders on the book. If I go trade at 5 lot, I might not move the market a lot, but I could move it a couple ticks past the level, right? Which may trigger shorts or may trigger stops or whatever it is. But if I see convinced volume, right, and we can see this volume increase at this level, that's telling me that, hey, for right now, this level is broken. And then again, that gives me an area where I can limit my risk, where if I short somewhere in this candle, and we can see again on a 3-minute chart, we frame out the high volume candle that broke the range, 50% acted as a resistance. That 50% also tends, in this case, lines up with 19,500, which we know is a major psych level. And then I can set my risk above where I know that breakout happened. And we can see it here, right? And again, the goal of this segment is to review all of these things when the markets aren't moving. So then when we see it happen in real time, we can say, hey, that looks like that setup. I want to go ahead and take it. Coach Vince says, especially the NQ and the YM, they're thin, easy to bully around. Yeah, 100%, right? I hear, sometimes, and everyone learns about the markets differently. Traders say that volume doesn't matter, or, it's run by an algo. The way I look at the markets is all of us here, whoever's watching in the chat, everyone that's trading, I'm not an algo, right? And when I execute an order, it's either to buy or to sell. If an algo is coded to trade the markets, the function of that algo is to either buy or sell, right? So, paying attention to where these orders get filled is extremely important. So any other questions? If not, shout out to Coach Vince. Hey, D, good to see you here as well. D, I know it's late for you, but thanks for staying up to watch. Any other questions right now? Don't forget to show us Quantower and Delta information. Yeah, it's loading right now. Let's see. For some reason, it's not. Okay, there we go. All right, so I'm not going to pull it up because I'm just sharing my Topstep X screen right now, but I'm looking at the candle that is, and this is a 3-minute candle on the NASDAQ. We'll look at the 11:27 Central Time candle. The 11:27, there's negative 505 delta, and that candle, the high of the candle is 19,445. The low is 19,412. And then the very next candle after that one, the delta on that candle is negative 490. The high of the candle being 19,427 and the low being 19,380. Right? So these are these two candles right here, 11:27 and 11:30 Central Time. Now, this is the play that Coach Paul loves, right? Where we see this heavy selling into a demand area. And we've talked about how you can potentially trade this. And again, anything we're talking about is for educational purposes only, not a suggestion to take a trade, but we want to identify patterns. We've talked about potentially buying at the low of this, where we see heavy volume. It basically gets absorbed at the lows, where you can buy somewhere down here, risking these lows. It's a riskier trade, right? It's a lower probability trade where if we get the follow through to continue, we'll continue to sell off, right? Similar to what we saw here. This heavy selling, I could have bought this. At some point, my trade was in the profit, but I didn't get the buying momentum behind this to continue. So it's a lower probability trade, but maybe a better reward for where you're taking it, because I'm taking this trade 60 points away from where confirmation is. But if you are maybe a beginner trader, you don't want to take as much risk, you want a higher probability setup, waiting for the market to close above where we saw this selling come in. Because remember, these are the last sellers of this move, right? So if the market does not continue lower, they're late to the party. And I'll just poll the chat. If you were short at 19,420 in the NASDAQ, we pushed below 19,400 and didn't continue. When we get back above 19,400, what are we all going to do? I'm going to buy it, right? I have a stop somewhere, and then that's going to push the move up. So I like to find where failed volume happens, right? And I consider this failed volume where they tried to push it lower, the market closed above their price, and look at how we respond. They don't step in again, right? The market does trade a little bit into their zone, but hopefully your stops aren't that tight, right? Where the high of that selling is 19,445. Once we got a close above it, we didn't trade more than 11 points into that range, right? Well, if you're trading too much size, then maybe you get stopped out on a trade like this. But from a market generated information perspective, sellers failed here. Market got back above their price, and eventually they have to become buyers, right? They got to close positions. We all need to close positions by the end of the day. And that's a really nice trade. Now, do you hold this entire trade? It's a 2-hour trade, 187 points in the NASDAQ. It's an amazing trade if you can hold it, but a really nice opportunity for a trade there. And then the close, right? The close, we had, I think it was 6 billion to the buy side MOC for the S&Ps and like 4 billion in the NASDAQ or something like that. And what's funny about that is that close, as violent as it was and as quick as it was, all it did was bring us back to the highs of the range. Which, you know, when you zoom out, it's not unreasonable to see that and expect that as a close, but that was a wild move. I don't know that I was expecting that. You can see on this practice account, I was trading the reversal challenge and I was short. So, can you explain it to me like I'm drunk? Well, hopefully, I mean, I shouldn't even say hopefully you're not drunk. It's Friday. Go enjoy your weekend. If you're drunk, I would say watch the replay and put the playback speed on 0.5, and then hopefully it explains it to you. But let's go into gold and crude oil real quick, and then we will call it a session and send everybody off for a great weekend. So gold, kind of the same story. We are in this range. I'm calling the highs of the range in gold 25.63. The lows somewhere 25.28, and maybe a little bit lower than that. But gold very much in a range as well, right? If we put up Coach Paul's moving averages, we can see it in VWAP as well, but the moving averages, again, braided around each other. Gold not making a decision either, but again, still opportunity to trade it. If we have the Topstep daily levels on, and I would suggest having these on there, I look at them as visual cues, but they are areas of opportunity that the market is going to potentially trade to. And CC, you have a great weekend too. But we can see it, right? Settlement up here, 25.60. I don't know who said it. I think it was James that said settlement has been fire this week. And there you go, right? Here's a rejection off of settlement. You know, it did happen early in the morning. If you were up watching D trade this morning for the London Open, actually, I don't think D did the London Open because it's Friday, but make sure you join that segment because I know Deanna is looking at a lot of these setups as well. You know, anytime I hear D speak, a lot of the time we're looking at the same areas, which is always great, right? You have another good trader who is looking in the same area as you, gives you a little confidence in the setups that you see. But again, a range-bound market in gold as well. We have, I'll take all the drawings off. Fast markets is hard to trade. They should call it fast break markets. Yeah, they're hard to trade. The way I really like to trade the open is if we don't identify a trend, and you hear Hogue say it all the time, right? If we open in range and in value from the prior day, right, where we're trading, all the same prices, a lot of the best trade location comes after the first hour. And if we look at the NASDAQ today and the ES, the best trade came after 9:30 Central Time, right? Where we could have traded that range-bound market, but the best trade that gave us a direction came after that first hour, which is important. If you're finding that you're struggling during that first hour of trade, Just sit it out. You can watch the markets and see what they do. If we start to trend early, you'll notice it, and then you can trade that trend. Or if you're a a range bound trader, then that's your time, right? If the market if you identify a range in the beginning of the day and it's not trading out of it, just like we saw in the ES, right? 30s to 45s, trade it until it breaks, and then once it breaks, that's when you adjust and say, hey, you know what? This is no longer a range bound market. I have to adjust my strategy. But let's go to the gold open. And very interesting what we've seen. So over the course of this week, we've been seeing a lot of the move in gold and crude happen during Asia and London session, where today was a little bit different, right? Where we had a sell-off, but it finally gave us a trade during the New York session, where a lot of this move in the overnight was kind of choppy, kind of overlappy. But when we opened, and gold opens at 8:20, 7:20 Central Time. So I'm going to frame out that candle. If we do what we do all the time, and I'm using this on a different platform, so let's find anchored VWAP. If we anchor VWAP to that gold open, it left the range in the first, from the floor open, right? It left the range in the first 10 minutes, which is telling us that not only is price going lower, volume is going with it. One of my favorite trade setups, we talked about probabilities. I would call this probably a 75% probability trade. There's probably a couple of other things that I can add to it. What does volume look like? Are there potential levels? I would call this 75%, where we close outside of the opening range. VWAP left the range as well, and then we test and reject acceptance back inside the range. If I see that, I have to click the button, right? And we see why, right? VWAP left the range. Every time we check that VWAP, the market rejects off of it for the rest of the day. Coach Paul and I have talked about this trade a lot, and what he tells me is just like, hey, you know what? Take that trade and don't close it until you get a significant close above VWAP. If that's the case, right? If that's how I trade that trade, if I shorted at the low of this opening range in gold, you didn't exit that trade until the auto liquidator took you out of it, right? So a really nice opportunity if you wait for it, if you're patient for it. James, you have a great weekend too. But a really nice setup in gold there. D says, I wouldn't open new trades in the first 30 minutes of active trading. Statistically, very hard to find an edge for a brand new trade after the open. I agree, right? There are those times where we just see a breakout and we say, you know what, man, we could have caught that breakout. But from my experience, you'll get a trade, right? If the NASDAQ is going to trend 300 points in a day, I don't need to catch the first 40. Right, there's 260 points available for me to trade in that I can say, hey, tell me what type of day this is going to be. Once I identify that, then I do my job at taking, the other, how much of a percentage I can of the other 260 points of that trend. Trading mentor I had a long time ago used to say, the tops and bottoms of the market aren't meant for us. We're all retail traders. And the reason they're not meant for us is because we don't create them, right? Someone with a large account has to come in. Hindsight easy, but in real time very hard. Absolutely, it really is. And I don't want to make it sound like it's easy, but because it's not, right? Because we never know, right? Robert says it all the time. We can set profit targets for our trades, but we don't know where the market is going. We can only assume based on what we've seen to a high probability, and that's why we manage our risk, because just because a pattern looks like something I've seen before doesn't mean that this time it's going to work. So you don't want to, just put your whole account on, yep, this is my setup, because nothing's 100%, right? And we don't want to put our whole account on one trade. Anything else on gold? Dan, you have a great weekend as well. Let's see, I got another question here from Benny. Hey, coach, I was the one in Discord yesterday asking about ambition versus greed. Just wanted to ask about imbalances and what you do, or how do you try to avoid trading them? So I don't try to avoid trading imbalances, Benny. I try to trade the imbalances, right? Because what an imbalance is, and the way I'm reading it, a market participant came in and traded a ton of size at a level that the other side of the trade was not willing to defend, right? So if I see a sell side imbalance, a market participant came in, sold a bunch of contracts, and there was not a buyer there to defend that position. So when the market trades back to these imbalances, I know that at least in the past, there was a seller there that created that imbalance. When we trade back to there, I want to see, is that seller still present in the market? If they are, then I can assume that that's another short, right? And it gives me an opportunity to limit my risk, because if I can identify where they created that imbalance, the way I'm going to think about it is, okay, we trade back up into their position. I want to trade somewhere in it, and my risk is going to be out of the way for where they stepped in, right? So if we're looking at crude oil here, if I see an imbalance at 75.60 and the market pops back up to 75.60 and I don't see bullish order flow, right? I don't see a bunch of volume just pushing us to the upside. I'm going to try to take a short somewhere in 75.60 and set my stop above where I saw that market participant coming in. Because if they're defending their position and they're still in it, maybe they didn't take profits at the low because they're building a bigger position. I want to be able to short with them. So if we get a bounce here, I can limit my risk. And if they continue to sell the market off, then I'll make money with that position. So hopefully that makes sense. All right. Crude oil. I didn't pay too much attention to crude today. But let's look at it on a 30-minute chart. We know that crude has been kind of in this, again, range as well. We're not seeing a lot of trends anywhere in this market. After this rollover, I'm calling the highs of crude range 76.70 up to 77. Right? You can see this range here. Topstep daily levels, we had yesterday's value area high at 76.68, and the lows of this 30-minute range somewhere down near 71.50. So again, we traded like a range bound market on a higher time frame. In the morning, we had, looking at the London session, we tested up towards the highs of this range. Didn't get exactly to yesterday's value area high. And sometimes what doesn't happen is as important as what does. If the market is showing that it can't trade up above those prices, it's weak up here, right? These buyers are weak up here. There's less volume right now. I'm looking to potentially take a short here, and I don't want to frame every hindsight trade as what we could do perfectly. Let's say I was long here because there was a long trade into this, and we're going to frame out the long instead because we're not always going to get direction right. So I'm going to frame out the Globex open, which is 5 p.m. Central. And there is a case for a long trade here back up towards the highs of this range. So let's do that instead, because I'm not always going to get direction right. So let's make this a little clearer so we can see it. And basically all I did here was what I do for every market: frame out a range, attach a VWAP to it, and see how the market trades, right? Where this is a 30-minute Globex range. Maybe I want to take the short where we break the range, VWAP left the range. Again, that's the pattern that I said, if I see it, I have to take the trade. Maybe that's an initial short. The way I manage every trade is I want to have an idea of where I think the market can go, and then I'm assessing how good of a job the market is doing what I expect it to do. So if I got short here where we retested the lows of the range, which is 75.84, I'm managing this trade, right? Where if I trade multiple contracts, maybe I'm taking some off if I don't see continuation, or maybe I hold the whole trade and my risk is up here and I lose. I did a short crude today from London distribution and caught the entire move down. Took 3 hours, but great trade, D. Great trade. Did you catch this move also? This sell-off? This had to be news, right? But if you caught that, that's a great trade, D. But here we go. We initially had a long here, right? Initially, there's a decent trade for a long in this time frame, where we have a breakout of the Globex opening range and a 60-tick move to the upside if you were looking to long this. So you had a trade that was in your favor, but I think it's important to, again, assess how good of a job the market is doing at what you expect it to do. If you were long here and you see this hesitation and you say, you know what, no, it needs to go up to 80, you were right, and then you were wrong because you weren't paying attention to what the market was saying, right? We have a ton of selling that came in at these highs. We know that this is the high of the range, and you got to trade what the market is showing you. And then after that, we rejected up there and just sold off. I'm not sure if there was news. I didn't see anything. But that's just a very strong move right on the crude oil open, the floor open, which is 8 a.m. Central Time. And from there, if we anchor a VWAP there, you're going to see it left the range as soon as it started, right? So that's a quick one, really quick trade. And then at that point, look at the volume. Volume dies out. We had 3 high volume candles. And then after that, pretty much downward sloping channel kind of range the rest of the day, where we kept rejecting at VWAP, right? So if you wanted to get in short, again, you have to trade it like a range bound market. At this point, the volume died out, but gave you 1, 2, 3 opportunities to short off that anchored VWAP from the session open, which I think is really nice. And that's it for the major 4 markets. Again, I know it is, the day before a holiday weekend. So if there are any markets you want me to cover, if not, we can call it an early session and, everyone go enjoy their weekends early. But hopefully everybody had a good trading week this week. Let me make sure I'm not forgetting anything. Remember, we just talked about a holiday weekend. Labor Day, TopstepTV is off. You want to make sure you check your emails as far as, trading hours and when we can trade and when we can't. Topstep does send out an email, so make sure you go ahead and read that email. Really important. I don't believe that we can trade accounts at all. Could be wrong on that. I should probably read that email myself. But make sure you go do something fun, right? Go enjoy yourself off the charts. If you do have to do some review, you got a good time to do it, right? There's 3 days. We can party 2 of them and review for 1. But you decide how you want to spend your weekend. Make sure you go do something fun for yourself. There will be no slow markets on Sunday night, but Nick Fortick is still going to do the market kickoff at 4:45 Central Time. So make sure you check that out as well. Topstep X update. We do have you can change the execution color, right? So if you use a lighter chart, you can change the color of your executions. Where we go into charts and data, you want to show chart executions, and then you can pick whatever color you want from there for it to show up on your setup. And then next week we have Linda Rashke, who it seems like has worked with Topstep a lot in the beginning of Topstep. She's the author of Trading Sardines. She's joining us next Tuesday, September 3rd. So when we're all back after the holiday at 11 a.m. Central Time. Linda has been a market maker for over 40 years. So I'm really excited for that, especially with my volume analysis. And it's why I love working with Coach Paul as well. He's a great guy, but he also has run a bunch of businesses that traded high volume. So when I look at volume trade on the charts, I want to know from their perspective, right? What were your intentions when you had to trade that much size to run your business? So I'm going to be tuned into that segment for sure, taking a lot of notes. Her hedge fund was ranked 17th out of 4,500 for best 5-year performance by Barclays. So definitely a segment we're going to want to watch. I will be there. I think Hogue is running that segment, so we know we're going to have a lot of great questions. And Market D says, Linda, the originator of turtle soup. There we go. There we go. So I think that's it. I don't know that I have any other questions. Go ahead and hit that like button if you haven't done so already. If you have, don't hit it again because it's going to take it away. Tell your friends and family to subscribe. And I want to make sure that, say everyone have a great weekend. We work really hard at what we do here. And whether or not you're seeing the results you want right now, keep going with it. Be patient with yourself, but also be honest with yourself about where you are in your trading journey. And that's how you're going to continue to make progress. So thank you everyone for joining. Have a great weekend, and we will talk to you all next week. Have a good one.